Let's discuss AMC stock today. What's happening? Could this be the beginning of the long-awaited short squeeze? I'll definitely show you my portfolio where I buy a significant number of AMC shares. I also have an extensive strategy. I've made a lot of trades in this area. I'll also show you the 3D volatility. We'll look at the overall volatility. It's growing very strongly. This sends us very important signals. I'll also show you which levels we should pay attention to. And if we break through them, something unimaginable will begin. I'll also show you what the market forecasts for AMC. We'll touch on the strategy developed by artificial intelligence. We'll also summarize where we stand with my trading strategy on AMC for this week, what's happening, and how I managed the portfolio from the very beginning. After the end of March, when the company announced a new additional issuance of shares, the price fell by almost 50%. This is absolutely normal. After each additional issuance, the stock price drops significantly. As we can see, this started back in mid-August. The company then fell by 70% or even a little more. Then they announced another additional issuance. In November, the stock also fell by 70% and then continued its downward trend. Then in February, we seemed to stabilize, started growing, until they announced another additional share offering. So the company simply lives on additional share offerings. What can I say about this? Of course, there is a rebound, the stock has risen, but the question is, what's next? We'll help figure this out. Let's take a look at the volatility right away. The volatility is increasing very significantly, reaching 130% on some strikes, which is very serious. We can play this. I'll tell you right away that I sold several interesting options, and then I'll show you exactly what. Let's take a look at the volatility smile. As we can see, the smile on longer strikes doesn't change. Volatility remains high, both on the upside and the downside. On shorter-term strikes, volatility is slightly higher because earnings are coming up. Let's look at historical and implied volatility. At the moment, implied volatility is the white line, and historical volatility is the gray line. As we can see, implied volatility is much higher than its historical value. From this, we can draw many important conclusions. We can play this volatility by betting on a decrease in volatility and its return to historical levels. I always tell you that you need to trade not the stock itself, but its volatility, because no one knows where the stock will go. It can start rising, the stock can start falling, but volatility has a certain forecast. Volatility always returns to its historical value. Let's see what artificial intelligence can suggest us. We input the volatility here, aiming for a 30% decrease in volatility. And the artificial intelligence gives us a very interesting strategy. For example, we're selling 2 options with a strike price 3. We can earn quite well on this, assuming, of course, that the volatility will fall and the stock will remain at the same level. There are more interesting strategies, such as selling a put option with a strike price of $3 for May and buying a put option with a strike price of $3 for June. But I still prefer to rely on my trading strategies. On my trading experience, it's more promising and interesting. Let's see what the market will predict for us next month. And as we can see, the market forecasts have changed. Now, the highest probability is that in a month, the price will be between $3 and $3.50. This is the highest probability. There is also a probability that the price will be between $2.50 and $3. The total range from $2.50 to $3.50 is 40%, and the market reacts to this and puts money on it. Let's also look at the 3D volatility. Here we have all the strikes, all the volatility, all the dates. Expirations professionals can immediately understand which strategy to choose. Also, I immediately show my portfolio how I manage positions. As we can see, I have a lot of options sold in the last week. I sold a lot of call options. I'll explain why a little later. But first, I want to roll over the sold options with strike prices of $4.50 next week because they expire today, and we are going to roll them over now. Rolling over involves buying back the sold option and selling an option for the next week. There, I have completed the rollover entirely. The rollover was quite successful. I rolled over 5 options with a profit of $8 each. Also, I rolled over 10 options with a profit of $5 each, totaling nearly $100. Just rolling over to the next week is very good. Of course, I will record this in the spreadsheet. I got $35 in total from rolling over 4 options with a $4 strike price, considering the commission, of course. And I also got $45 considering the commission from rolling over an option with a $4.50 5 price. Also, this week I sold call options. I sold 16 call options with a $3.50 5 price for $100. I also sold 6 call options with a $4 strike price and 10 call options with a $4 strike price and 10 call options with a $4.50 5 price. These are for different weeks. Someone might ask me why I'm doing this since there's unlimited potential for losses, but don't forget that I already own 1,600 shares. Essentially, this is about skillful position management, as I've always mentioned to you. Right now, I'm trying to explain as objectively and simply as possible what exactly I'm doing. I'm using volatility, I'm observing, I'm analyzing what can be done here. Also, I want to sell a few more options, call options. I'll sell another 5 with a strike price of 4.5. For me, it's safe because I've already sold quite a few put options. Just now, I sold some more call options. We can see that today I've sold a total of 10 call options with a strike price of 4.5. I've also noted this down in the table below. That's it. I've entered all the information into the table, but again, under no circumstances should you replicate my trades because I've long known how to do this. I understand well what to do if the stock falls very sharply. Everything is under control for me. If you're a novice and you don't know how to manage positions, it's better to just watch and learn. I always explain in detail how I do it. Additionally, we haven't touched upon the trading volume of options. As we can see, we have a very large volume hedged at the $3 and $3.50 5. This is for call options. Also, we have a very large volume hedged at the $3 level. We also have two huge support walls. We couldn't overcome it at first, but today we're surpassing it. If we close above this value on Friday, it's very good. We still have $3.50 5 of us. If we surpass it, then the road to $4.50 5 open. But again, I'll repeat once again, I don't believe in huge short squeezes. I fully admit that the stock could grow to $10, but all the bloggers who tell you that there will be short squeezes up to $200, $300, $500, I consider it a lie. It's deception. Don't believe them. Yes, the stock may grow, but I don't believe it will reach those levels. My philosophy, my task, is to skillfully manage positions. I show you everything as clearly as possible. None of the bloggers show you this, because all the bloggers earn from views. Remember, I explain this in maximum detail. I don't know how to explain it more thoroughly. I simply show live, how I open and close trades. You can open this table in the description, watch it for free. Let's summarize the week's results. Today is April 19th, 2024. Currently, AMC is priced at $3.20. Immediately record these data in the table. I remind you that I started my experiment with $10,000. This is my strategy and AMC. At the moment, AMC is up by 23%, whereas my strategy is currently in a slight positive at 3.5%. My lead over AMC is 27%. Again, what is this connected to? Look at the blue lines. This is my portfolio, the red line. It's AMC. As we can see, my portfolio behaves much more steadily and better than AMC. Let me tell you, I employ complex, combined strategies through options. I sell options, I buy options, I hedge my risks. Also, I buy additional shares. I sell call options on the stocks I bought. In general, it's quite intricate, but I'm showing you as much as possible and proving my philosophy. It's about smart position management. If you learn to manage positions smartly, you'll start making money. I promise you, I guarantee it. Also, I remind you, when I get monetization, I'll launch a completely new portfolio from scratch, where I'll show how I build the portfolio. In fact, I've already prepared a dashboard, an Excel spreadsheet where all my stocks will be listed, the dividends on these stocks that I buy, a spreadsheet for trading. I will definitely record a separate video about this dashboard. I will definitely tell you for free how to use it. I'll provide a link for free download. Everything will be absolutely transparent. I'm already starting to think about how I'll proceed and what exactly I'll be purchasing. This experiment will kick off soon. I guarantee you, I promise you that. It's going to be very interesting selecting stocks. I'll make everything as clear and public as possible, showing you exactly what I bought. Why did I buy it? I guarantee you will outperform all the indexes. You'll see what real mathematical price forecasting and portfolio management according to mathematics look like, not just technical analysis or anything else. I also advise you to watch my previous videos regarding AMC stock. I also explained there how I build my portfolio, what strategies I employ. Very important information. Be sure to check it out. Good luck to everyone.